JSW Steel's FY20 annual report had a lot of interesting takeaways, of course, right from what the company has done in the last 1 year in a pandemic-driven year to what's in store for the steel super cycle going forward as well. Could this be a short super cycle or a long one? And if it's a long one, what really are the triggers behind that? So Mr. Sajjan Jindal has spoken about the achievements of the company. He says that the one thing that has been a game changer has been the winning, the way the company has won the iron ore auction mines. This is something that has given them security on iron ore raw material as well. Plus, remember that iron ore prices have surged quite a bit, in these last couple of months. In fact, in the last 1 year as well. So it's been a game changer for sure, according to Mr. Jindal. He also says that the other big achievement is that they have set their overseas operations on a turnaround path and they expect improved performance in FY22. The share of value-added products as well has increased to 52% of sales. And while they have their CAPEX plan, they will not let it increase debt. They have already put almost 48,000 crores in CAPEX to increase capacity by 50% in the last 3-4 years. But their debt has remained steady, and he endeavors to keep the net debt to EBITDA ratio at 2.75x. He boasts on JSW's capabilities to be able to scale up capacity at an industry-leading CAPEX per ton and in a record time, and that JSW has delivered industry-leading total shareholder return CAGR of 24% over the last 10 years. Now, talking about the steel super cycle, which has been seen in the second half of the last fiscal, they say about how this last one financial year has been a tale of two halves. The first half was highlighted by, the downtick in demand and pricing. The second half, though, was highlighted by a super cycle. Now, they say that super cycles typically last anywhere between 5 to 17 years, but steel will be a natural beneficiary of the large-scale public expenditure on commodity-intensive infrastructure. And the other big opportunity they see in the global transition towards renewables. In fact, they believe that demand is expected to rise 7x to around 100 million tons from the renewables sector alone. In India, steel demand, regardless of what happens to, the cyclicality and the cycle of steel in the global markets, India demand will be driven by increased consumption and infrastructure creation. And thus they believe that whatever new steel capacities are put forward, India will be able to absorb all of that. Even, in fact, with full utilization of the existing Indian steel mills, the steel that will be produced will not be enough to cater to demand, and hence sees a lot of opportunity in the Indian steel market, and JSW is charging ahead with their targeted capacity of 37.5 million ton by 2025.